Gentlemen, how are we all?
Good, Matthew.
Very well, thank you.
Okay, well, I better explain what's going on, hadn't I? So we spoke with Bryce earlier in the week. He mentioned something to me, which was that this ensemble, the team have gathered to actually help UBS try and understand what's going on in the nickel market and the cobalt market. I thought we'd kind of try and elbow our way in on the act and try and talk about some of the things that big banks like UBS are wanting to understand. So I appreciate you bringing the guys here, Bryce. So if you're okay, we're going to little romp through the US ecosystem for this critical minerals stuff, and also talk about maybe some more practical stuff on the ground. So without further ado, why don't you introduce the team, Bryce?
I'll do that. So it's a pleasure. We don't often wheel them out often, but I thought it'd be interesting for you and the viewers. They've seen my face a few times, but there's obviously part of what we're creating at Jervois is organisational depth. So you've got Greg Young. So Greg was one of the founding partners of Glencore. Set up the USA business for Ivan. Original background was ferroalloys trading, nickel trading, cobalt trading. Built up the cobalt book for Glencore. So he was co-CEO for over a decade. Ran the Stanford office. The liquids office was the other co-CEO, based out of Houston. Kind of retired from Glencore, if you like, 2013, 14, around the IPO. And I guess I approached Greg. We've kept in touch. We worked together closely. We moved all the Falconbridge product after we acquired the Canadian-based metals company. So Greg obviously he's one of the preeminent metals traders in the United States. And for him to come back on in an executive capacity, really exciting for the company. We've got Wade Yalman. So Wade, again, we all know each other well. So Wade was OM Group, which had the Kokkola refinery in Finland, subsequently sold to Freeport. And one of the most significant cobalt traders for 20, 25 years of his career. And so Wade is working with Greg. He's based in the United States also. So both Wade and Greg came on as a large result of Sao Miguel Paulista, which we've spoken about in other calls. Klaus Woolhoff was the other executive. So Klaus worked for me after we acquired Falconbridge in 2006. We had to keep obviously the headquarters in Canada for Industry Canada purposes, foreign approval. So Klaus ran a custom feed business essentially. So it was a 100 to 200 US EBITDA business trading mats, concentrates, spent catalysts, hydroxides, similar to what Wade had functionality for at OM Group essentially, our industry peers. So that's now formed obviously part of the Glencore trading book. It sits within the nickel book. So it's part of that 2.5 to 2.8 bill guidance that you see Steve Kelman and Ivan providing these days. So Klaus joined Jervois. He was working with us from early on, from around the inception, and came on as an executive, again, associated with the San Miguel Paulista refinery. So I guess the concept is, the business that Klaus ran was really based around the Sudbury smelter, Nickelverk refinery, and we had an agency agreement with BCL. So for context, Klaus had 35 traders based around Japan, North America, Europe. The business that Wade ran, again, very significant. So there weren't, at the time of the Xstrata Glencore merger, there was a trader from each side who sat on who was dealing with the antitrust with the DOJ and EC. For context, so I was on the Xstrata side. I had a Glencore peer, Glencore Xstrata in a 60,000 ton cobalt market. We controlled around 38, 39 at the time in 2013. You only see the production volumes. You don't see the traded volumes. And I don't know, Wade at the time would have, running in Kokkola, would have probably been trading another 11. So for context, the last time this group was together, they controlled effectively 80% of the global cobalt market. So to get that level of capability and depth in a company like Jervois, it's kind of unique. Makes my job a lot easier since Greg's come on. He's certainly just hit the ground running and taken over that customer interface as we really look to build up a business model which is a little different from others. I've spoken, if you look on the investment presentations, that trading business and the refining aspect of our business, we think it's exciting because we really value that customer interface, that customer interaction, the direct ability to sit down with automakers, sit down with battery makers, he or she who controls the product is king. And I think that trading mentality is certainly part of the culture that we're looking to bring into Jervois, and to have three of individuals with the level of capability they've got, it's pretty exceptional. I mean, it's certainly, it's not only exceptional for a small company like Jervois that's capped at 400 mil. I think it's stronger than many of the largest trading organisations globally. So that's my kind of introduction. And just after that, I'll kind of pass across to yourself for Q&A. It's very informal way to kind of handle Cobalt, Klaus, Nickel, and we'll try and help out your viewers. Fantastic. I appreciate that. It's meant to be informal. There's 5 ties in the room, so we need to work on the optics a bit. But well, let's try and keep it casual. If I may, I kind of want to address this at Greg, if I can. Okay, so given Greg's background, he's based in the US. I think you told me, where are you? Where are you based actually, Greg?
I'm in Connecticut, outside of New York City.
Right. Okay. So in Connecticut, that's in New York City. Fine. This is a small, 400 million market cap. For you and your background at Glencore, this is still a small company, right? It's getting there. Why did you want to get involved with this guy, given where it came from? You know,
that's a interesting setup. First question for Bryce. Actually, when I joined Glencore in 1987, it was small. It was called Clarendon Limited then. It was really just a shell of what it is today. It had no assets, no production, and we were literally just a trading company. So why Jervois? It's a second chance to build a company. Jervois is a fantastic platform. It's young, it's new. These battery metals are exciting. Access to capital, people are looking to invest in this space. Clearly, the battery narrative is everywhere these days. So why Jervois? It's a second chance to build a company, to build a real entity that makes a difference. In this case, it's going to be a Western supply chain, all ethical mining, and we are really going to focus on just the top tier of ethical mining and Western supply chain.
That's the difference. That's the difference you're buying into. Okay. It's still, there's not a lot of moving parts in this, in the sense we've got Cobalt in Idaho, and we've got S&P down in Brazil for the nickel. It's going to take a lot more than that to get up to the kind of scale that's going to keep you interested, surely. So what are you advising the team to do next? You're kind of an oversight guy, strategic guy. So what have they got to do that they're not doing yet?
So we're looking at both organic and inorganic expansion. Clearly, we can't talk about specifics, but you are right that 3 years from now, if we're still sitting with just ICO and S&P, then it will have been less of an exciting period that I'm hoping for. So we're really looking at pieces of the puzzle and trying to build a much bigger metrics than we have now.
Right. Okay. And you want an ethical supply chain. I think everyone's talking that game. You've got to, because the big institutions where you're probably going to have to go for your money are talking that language too. So did the US make sense to focus on? Because there were some African assets. Did it just make sense, given this vision, to start in the US?
I wasn't with Jervois when we bought ICO, so I joined after. It certainly makes sense. The USA has no production. The U.S. OEMs are pining for exposure to mining assets and in the ground cost structure. So I think the USA makes a lot of sense. We do need to expand our geography a little bit to take some additional space and just give us a broader platform. But we really have to focus on ethics and ESG first.
Sure. But everyone's talking that game. So how do you deliver it?
We focus on top tier assets, good investment platform. And I think the team that we've assembled here today has a much better perch to assess the market than many other people who are entering the space.
Why do you say that?
Well, we just have, between the three of us, Bryce, I'm going to leave you out of this one for now. We have almost 100 years of experience in commercial transactions. So really the commodity business, yes, it's predicated on mineralization and quality of asset. But if you don't have the people who have experience and expertise to bring the asset to market, then it's good people, Matthew, that make a good business. It's not just the asset. So bad people can ruin a good asset.
You guys, I'm interested in this because there's a lot of sales guys here. So they're traders. They're buying, they're selling, right? Not so much on the exploration development yet. So does that give us a clue as to the sort of way that you're going to build up this company, or the way that you're suggesting you guys build up this company?
We have engineers, but I think as we broaden this conversation a little bit to Klaus and Wade, I think you'll understand that we have a very good handle on the technical aspects of not just our production, but the products itself, which is very important.
Right. Okay.
These are industrial commodities, and yes, they're commodities, but they have specific applications and chemistries that go into these applications, and we understand that.
Okay. And in terms of plumbing into the US ecosystem, as you said, Idaho's, I think, is it the only source of cobalt? Domestic cobalt?
The only cobalt mine in the USA, yes.
Right. Okay. So, we talk a lot about the critical minerals list from various countries, but the US is starting to get quite aggressive with the language being used. We've seen that from when Trump's administration. We're seeing it again with Biden's administration, and the amount of money, State of the Union speech, the amount of money that's being talked about being allocated to, carbon footprints and carbon neutral and across the board. How do you plumb into a system like that? Can you bring something to the table on that front?
Well, we've confirmed conversations with the DFC, DOD, and the DOE. The government moves methodically, systematically, so nothing happens terribly quickly, and they make sure to dot their I's and cross their T's. So we are in the process of accessing their metrics of system. I will say my own personal belief: when a government deems a commodity to be a critical mineral, it really begs to have public and private investment. So it just means that government should be standing side by side with banks or other financial institutions to quicken the pace at which these projects can come to market.
Government's quickening the pace. That'll be a good one. That's new news headline. But it is kind of important to understand how you talk to government. Whether there's a dependence on the government for the project to succeed, or whether you're going to, get on with the business of doing business. And if the government comes along, that's an added bonus.
So Matthew, we're not depending upon government investment. If government investment moves at a pace that suits our schedule, then it reduces our costs and helps our shareholders. So right. It's not, we are not relying on it. And if it happens, that's good for shareholders. And if it doesn't happen, the equity markets are such that we believe it's quite buoyant.
Okay. So Bryce, UBS called you up and said, hey, come and talk to us about nickel cobalt market and what's going on. What are their concerns, or is it just a, catch up on the markets generically?
I think it was more, obviously any investment bank's concerns are driven by what their clients are calling up and asking about. And I think they saw the opportunity to access and tap into three experts who typically we don't wheel out. I think I've mentioned that was that presentation was actually the first slide that Jervois ever presented on nickel or cobalt in 4 years or 3 years since I joined in late 2017 at the UBS at that UBS talk. So I guess we do believe that we've got something that was proprietary, and obviously that level of proprietary capability has kind of increased exponentially since these three guys came on as executives.
But is that the commonality there? Because UBS think big, obviously, hundreds of billions of dollars to be deployed. But you were talking quite a big language. As I say, it's $400 million company, so it's not nothing. But in the scheme of things, also, you're not anywhere where you want to be. So is it that big thinking that they're looking for? They're looking for ideas about how they can take advantage of these markets, and if so, what do you tell them?
No, I think the context was they wanted to talk about nickel, and I can tell you the number of times that Greg got wheeled out at Glencore to talk about nickel was probably zero. I mean, for most of their existence at Glencore, there was no interaction, even though he's one of the, even though obviously he's got the, I mean, it just wasn't something that culturally was done. Now Glencore's different at it now, like kind of, they've obviously changed their investor relations approach, I mean, 180 degrees since when Greg was there. But UBS, obviously, they have the capability, and they understand between Greg and, I mean, the two guys working for Greg as well, I mean, they're each as strong a commercial executives as you, in their respective commodities as you get in any company. And so to get access to that on a single call, like that's really, and it's topical, yeah? I mean, I think, as I said, Tsingshan came out with their announcement on converting ferronickel to matte. Nickel fell 7%. And that's where you can kind of see that there's a bit of an angle because, I mean, injecting sulfur into matte, it's not new. Peter Inco's been doing it. Donny Ambo's been doing it for like 50 years. And for those of us in the industry, like we knew this was going on for, it was kind of, I almost considered it public knowledge. So the fact that you can have nickel swing 7% on something that we all take for granted, just you realize that there is an information delta out there that, and that's really what the banks are trying to access.
Yeah, and then, well, there's a big conversation going on about HPAL too. You know, the creator and destroyer of value for decades. Yeah. So
why don't I flick across?
Was that part of?
Yeah. Why don't you flick across to Klaus? And okay. Klaus has got a background in nickel, and I mean, the context is I sent him down to Indonesia or Australia to cover Indonesia back when nickel pig was evolving. The only criticism I'd have is that his supply forecast was slightly wrong. I don't think we ever had kind of 900,000 tonne of nickel pig coming out of Indonesia in 2021. But aside from that, I'll pass across.
It was the rain. It's the rain. So, well, why don't you give us a little bit of your background for us, Klaus? Before I know we've heard something from Bryce, but give us your version.
Yeah, sure. I'm an engineer by background. I cut my teeth in operations, really. So I spent probably about half my career actually running smelters and refineries and the like. And then the second half of my career, I've really been in a more commercial role, trading intermediates, buying and selling, mostly intermediates, particularly for the nickel and cobalt industry. I have some exposure to copper as well. As Bryce mentioned, I ran the international trading business for Xstrata for about 8 years out of Europe, and that's essentially my background.
Right. Okay. So I want to understand what was discussed with UBS with regards to matte. What were you saying to them? Why is it a big deal or not a big deal? What's your take on what that's going to do for HPAL going forward?
My personal take on it is it's quite an interesting development. You kind of have, and we've known for a long time that you can convert nickel pig iron or ferronickel to matte. That's not new. It's been done for many, many years. But I think what's interesting is you now have a kind of industry that's developing in Indonesia where it looks like, and if everything goes according to plan, there'll be a fair amount of capacity installed in Indonesia to convert ferronickel to matte, which essentially means there's kind of a bridge between class 1 and class 2 nickel, which was more difficult to attain before. And especially if they kind of install the type of capacities they're talking about, which I think is where the interesting aspect comes in. It's almost like it's going to be a swing kind of producer. So if the economics are right, ferronickel will be converted to matte to feed class 1 nickel. But at the same time, there may be conditions where that doesn't occur, and ferronickel stays within the stainless steel industry. It just goes into that particular commodity. And I think for me the most interesting part is that, what I think what a lot of people don't understand is that conversion to matte, going through a converter. Converters are pieces of equipment that are readily turned on and off. They're not like HPAL units. If you start an HPAL, you never want to stop it. You kind of want to run that for the next 30 years. but you can switch a converter on and off within months, and that's kind of the key for me. So it really becomes a true swing between the two classes of nickel, which will happen or not happen depending on the economics of the day.
Right, because we've had the class 1, class 2 debate for about the last year, and people have come on and talked about intermediates as the way forward. There is no class 1, class 2 anymore going forward. It's all about the intermediate, right? So, I mean, just without sitting on the fence, I mean, where do you think we're going to end up?
I personally believe that we will get HPALs being developed. They'll take time. The technology is, I think it's more well understood today than it was, say, 10 years ago. And we have had success stories in HPAL. There are a number of operating units that have been very successful, especially the Sumitomo operations out of the Philippines. I think one of the key kind of determinants for success or non-success, and if you just look at the projects that are out there, is the ones that have tried to do too much on a single site are the ones that have struggled. So the very large Goros, Ambitobis, 50, 60,000 ton of nickel, not just producing an intermediate, going to final product. They've all struggled far more than the ones that have said, okay, I'm just going to put in an HPAL front end. I'm going to drop out a mixed hydroxide product. I'm going to let the refineries take care of that. And I'm going to focus on the front end. I'm going to get that right. So they've been more successful than the ones that haven't done that. Now, what you're seeing in Indonesia is there's a mix. So most companies are looking to make intermediates, and they're just basically going to copy the guys that have been a success. And I think that's probably positive. But there are others that are talking about going all the way through to sulfide production. And it'll be interesting to see how that all plays out. I'm not convinced that's a sound strategy. It's probably better to kind of put an HPAL in front end, make a mixed hydroxide, and sell that to the refiners who know what they're doing with that product. There are some challenges in Indonesia, I think, with HPAL. Environmentally, tailings is an issue. I don't think deep sea tailings deposition is something that's going to be allowed going forward. So you've got to find what you're going to do with the tailings. So, you can go to traditional tailings dams. It's not ideal. You have to be very careful in places like Indonesia. They've got massive amount of rain. So I think that's a real challenge for the HPAL operations, more so than actually operating the front end autoclaves and producing mixed hydroxide. I think making sure that you're able to deal with the tailings is probably going to be a bigger risk than actually running the HPAL operations. And I think that'll happen. And I think structurally that will be, because they've got a lower greenhouse gas emissions, those will be the preferred methods of supply of nickel into the market. But if those units don't arrive, you're going to have the swing supply of the matte production.
Right. Okay. Interesting. Well, certainly the environmental component. You talk about, I think, places like Rami, which have had a few issues, publicity on that front. Just coming to the beginning, the front end of that, which is, again, why people like UBS having these conversations is interesting to me, which is how did these things get funded? Because HPAL, we're talking, Sumitomo, 1.3, 1.4 billion, all the way up to, projects which are now have sucked in $10 billion worth of investment, right? So it takes a lot of money to get HPAL off the ground. Is that a barrier for people like UBS? Is it a barrier for the kind of larger institutions when you're being asked to do that, given the number of car crashes on the side of the road when it comes to nickel over the years?
Yes, look, I mean, the reality is all those projects went ahead. They weren't expecting to have those price tags on them. That's just how it developed. I think the industry's moved a long way from that now. And again, I think it's focusing on the things that work. I mean, if someone was to build an HPAL today, I don't think they'd expect the kind of cost overruns that they were expecting before, particularly if you focus on, just working on the fundamentals that work well. So the front end, it's not good. Look, there's always going to be costs, especially in places like Indonesia, because in a lot of parts of Indonesia, there's not a lot of infrastructure. So, infrastructural costs add a lot to the bottom line of these kind of projects. But again, I think if you can keep them kind of scaled to a size that makes sense, not too large, and build them in areas where perhaps you don't have to build your own power, perhaps you don't have to put in ports, all these type of things, the costs can be more manageable. But I agree with you. I think in the past there's been a significant learning curve. What I would say though is that we're 20 years down the line now, and I think things have moved on. So we'll see. I mean, the HPAL projects in Indonesia are being built. The first one's commissioning now. So we'll see how they move forward.
Bryce.
I was just going to say, on that call that was set up, so there's 70 institutions. I mean, my tip is none are investing in HPAL, not a single one. It's Chinese investment into Indo. I mean, sure, there's a couple of junior mining companies who are trying to build HPAL on poor quality ore bodies in Australia, but it's a game that no one, I mean, Western investors, they've got no interest in going into Indonesia and dumping tailings into bays and going through the country. And Indonesia is Indonesia. I mean, it's like buying an Argentine bond. Yeah, at some point, it's going to get defaulted upon. When you invest in Indonesia, at some point they're going to change the rules. That's Indonesia. And I think Indonesia's grand ambitions of where they view themselves geopolitically is not allowing China to export their climate compliance across to the country with regard to coal emissions and with regard to greenhouse gas emissions and with regard to tailings depositions. They've got grander ambitions, and that involves going downstream. They want to become the Saudi Arabia of the nickel industry. And if you look at the numbers, they're off to a hell of a start.
Yeah, well, we've certainly seen some of the estimates around the cost of some of these projects, but what they'll end up being is another matter. But yeah, Indonesia, Philippines, China triangle is something that we have to pay attention to, because there's a need on the demand side. There's a need for it. So the question is around ethics, and what Greg was talking about. If you look for ethical sourcing in the West, perhaps you need to be in control of that all of that supply chain, for sure. Okay, well, look, Klaus, that's really interesting. Thank you for that. We kind of better bring Wade in here and talk a little bit of cobalt, and then perhaps we're going to have a bit more of a holistic conversation about what you're building here. Hi, Wade. How are you?
I'm very happy to jump in and talk about cobalt along the same lines. Cobalt demand is growing at a pace that's unprecedented as the battery EV market takes off, and so cobalt's quite an interesting space these days.
But it's tiny. Does anyone care about cobalt anymore?
Well, certainly Jervois cares about cobalt, and I personally care about cobalt. I've been involved in the cobalt market for over 30 years in a variety of capacities, as mentioned earlier. Long time history with cobalt chemicals, cobalt metal trading, and even cobalt raw materials out of DRC through the Chinese sources.
So where's it going? Because we saw cobalt come back, make us a brief comeback 3 years ago. Prices went crazy. New cobalt companies popping up everywhere. What's the real situation in terms of on the demand side?
Well, the demand side is definitely projected to triple, and the need for materials to as much as triple over the next 5 to 10 years. And there's a pipeline of projects in place that, if you look at the various supply demand balance projections out there, anywhere from maybe we get there to a 12,000 ton deficit emerges in 3-4 years. So it's really going to be a matter of how fast the actual demand grows versus how fast the actual supply grows, as is always the case. But it's our view that the supply growth in most of that has to come from DRC is not going to keep up pace with the demand growth.
Okay, so let's talk about DRC, the sort of poster child of how to do bad PR when it comes to cobalt. So you're talking about ethical production here. You've been in and worked in the DRC. Is it just a simple case of the cobalt is going to keep coming out of DRC, but they're maybe going to encourage to sort of change their ways in terms of, I think child labor seems to be the line that's thrown most often at that.
There's a massive effort underway for all of the projects in Africa, in DRC and throughout Africa, to sort of get up to, sort of the societal requirements of no child labor and environmental awareness and capabilities. And that's happening. And that's been happening over the last, decades, but it's reached the point now where the major industrial suppliers have ticked all those boxes and are achieving what would be considered compliance in those areas. And so the expectations are that the new projects have to do that or they won't make it to market.
Right. So how significant is the cobalt production out of DRC? Is it so? Are they able to control pricing in the marketplace? Does it make it difficult for companies like you wanting to do the same thing elsewhere?
Well, I don't think any of the projects are able to quote unquote control pricing. Supply and demand controls pricing, of course. And the way that big actors and big players in all markets, but especially cobalt, which is a very opaque market, is they manage their production and supply to hopefully meet demand and keep prices where their projects are profitable.
Okay.
And that's very much the case in cobalt. You'll see projects opened and closed or production ramped up or ramped down to try and do that.
So, I mean, I sort of joked earlier on about the size of the cobalt market, but you picked a key word there, opaque. So there's different ways that the price is set in the market, because not too many people follow or track it, because it is a very small in terms of metric tons. How is pricing set?
So pricing is really price determination is really done by publications, trade publications, canvassing the market and understanding what transactions have happened. Pricing is set by buyers and sellers and bids and offers and deals getting done. And those are two different things, right? In an opaque market, not every one of the deals that gets done gets reported to the publications who are determining the published prices. It's been that way forever in cobalt. There are some terminal markets handling cobalt. The LME has been in cobalt for nearly 10 years, and now the CME is doing cobalt, which has actually gotten a little bit of traction. So as cobalt becomes more mainstream and the OEMs get involved in cobalt, it's my expectation that we'll start to see terminal markets have a bigger impact in the market. But that's probably still down the road a bit.
Okay, so you guys are at a Glencore, you're traders at heart here. I know that you and Klaus are looking at sort of operational side of the business too. But if I'm looking at the cobalt market and the positioning that Greg's given us, which is ethical, and we've got to be ethical about this one. You just said that DRC is sorting its business out, so it's all ethical if that happens, isn't it? So in which case, what's so different about you guys?
There may be a couple of tiers in the DRC where you've got the major industrial players who are working themselves out, and then another tier which is maybe another half of that is still a few steps behind in that process. And that's where Jervois brings a nice alternative. Is we're going to be a U.S. based mine with refining in Brazil, managing the units from the ground to the market, and bringing those cobalt cathode units back from Brazil to the U.S. as at the U.S. source, U.S. origin material, refined in Brazil with no DRC or Chinese component whatsoever. And that's the part where I find that we're going to be bringing value.
Does that come back to kind of this critical minerals component we talked about earlier? Because it's not Chinese, it's not DRC, it's sort of language of protectionism. But is that what the market needs to stand out?
Well, if you're a OEM or a consumer in the U.S., and you absolutely need to have that, right? That's going to be the case. And there's always going to be a question if you're bringing stuff out of China, where did the original material start out? If what's one of the sort of bottom tier suppliers out of the DRC, and maybe they're not quite up to speed yet on all the ESG issues, you're never going to know. But if you go with a Jervois entirely transparent supply chain, then it's an obvious answer to that question.
So he's sort of, I get these sort of the traceability and the responsibility, and OEMs will be demanding that, you know, that exists. But who's regulating that? Who is tracking that? Who pays for that?
Well, there's an industry effort underway to sort of standardize that. But today there are a number of organizations that are all sort of offering ways to get to that sort of confirmed compliance. And Responsible Minerals Initiative is the one that seems to have gotten the most traction and getting the most effort by the existing players. But there are a number of others that are underway, such as CIRAF from the Cobalt Institute, and another development called the Copper Mark, which the copper market has been using to identify their ESG compliant suppliers, and the industry is talking about a metal mark or something like that as well. So there are a number of things underway, but today it's the Responsible Minerals Initiative that is the most traction.
So what have you got to do to actually start getting cobalt out of the ground?
From an ESG perspective, we're operating in a jurisdiction that's going to make that quite straightforward. It's really just proceeding, following all the rules and regulations that would be in place for the U.S. and getting that Responsible Minerals Initiative sort of template tick boxed, and it's an easy case for us.
How long does that take?
The process, once we're up and operational, would be just like an audit process, so it shouldn't take so long. It's something that you can't really get done until you're actually operational, though. So we're laying the framework, so that'll be in place when we're ready to go.
Okay, and so when are you aiming for? What's the timeline and all of this?
I'll let Bryce.
Oh, Bryce, you've got the answers.
Well, we're starting San Miguel next year, and Idaho will be starting commissioning as well. So we've got the stage restart at Sao Miguel Paulista, based on materials that it's processed in the past. So that's what Wade and Klaus are busy doing, talking to cobalt hydroxide suppliers, cobalt intermediate suppliers in the case of Wade, and Klaus focus more on the nickel. So materials that the facility processed in the past, MHP primarily, mixed hydroxides, and also nickel sulfide suppliers, because we're putting in a POX autoclave as well. So, I mean, that's the exciting thing for us. Yeah, it's short runway to production and low risk restart, because the attraction of San Miguel is, we all know the facility. So Wade used to supply material from Tenke. Klaus visited a number of times, and Greg had a long commercial relationship with Voteran Tim, sold the Tocantins product in the States for decades. And the fact that it's just exciting, because this is a facility that's been operated for 30 years. The Tocantins brand is well known, and bringing it back to market is kind of low risk. And that's really where we're focused on, is kind of risk minimization.
So I get that. And we did talk about it earlier in the week, but how do you fill it? How, you're going to have to, I guess that's Klaus, probably back to you.
Yeah,
you've got to fill this thing and make some money. What's going on out there?
Yeah, well, that's correct. And the facility itself is actually a 25,000 ton per annum nickel facility, and we're not planning to start it at that. If you were to say to me tomorrow, can you fill 25,000 ton today? I'd say no. But we're starting. We're going to walk before we run. Our plan is to start at around 10,000 ton. I think that's a far more achievable number. We've been talking to many players in the industry around a number of different materials that are available. There are materials available. You're going to have to source from a number of different players to get that. But it's, I think it's an achievable number. It's not shooting for the moon.
Right. Okay. Is there?
In the greater scheme of things, it's only 10,000 tons out of a much larger market, and intermediates are traded all the time.
Well, that's what I was going to with Bryce, actually, because never a man to spend a penny or buy a drink, but he's also knows how to make a few quid. So everyone's smiling at that. Has anyone here ever been bought a drink by Bryce? No? Okay. You know how to make money, though. So are you tempted, given the timelines here, to actually do a little bit of trading, make a few quid on the side?
In terms of the economics that we expect to reach.
Given what these guys know, you're all traders, right? You know the market, you can understand the dynamics in the market. You've got a few things to do on the ground, but are there opportunities and revenue streams contribution to doing a little bit of trading while you're at it?
I guess what we're looking to build is a trading book, yeah? I mean, that's why Greg and Wade and Klaus came on.
But between now and then,
if I was going to sell, I mean, if we were going to sell all of the units to a single automaker, that's like every other $400 million mining company wants to. You don't need these guys to do that, with respect. If you look at the way Glencore structures their book and the way Greg's book would have been run in the US, and then obviously Greg was on Glencore's side, so I never was privy to the inside of the book. But I guarantee you, his book wouldn't have had more than 5-10% concentration with any one counterparty. It was about building up a blend of suppliers a blend of customers going out, and managing pricing, exposing QPs, and keeping the units flowing. These businesses, they're good businesses, yeah. I mean, that's the nature of building up a trading business around San Miguel. You never lose money on a contract. If you lose money, it's because someone screwed up the QPs, they screwed up the contract, or the operators down in Brazil didn't process material when they were supposed to, or someone didn't manage the freight going in or the logistics going out. These are good businesses. I mean, Greg, do you want to comment a little on how you see the value of San Miguel and the trading culture that we're starting to build?
I would say that we're assessing opportunities, Matt, and I'm not trying to really not answer your question, other than we're not just going to get into a high-risk trading business for the sake of getting into a trading business. If we can commercially make some money that doesn't jeopardize our asset base coming to market, then we would assess that at the time.
Okay.
I would also like to add something when you said, who cares about cobalt? It's the OEMs and the battery side that's getting all the glitter these days. But the old cobalt markets, radial tires, catalysts, paint pigment, pigment for glass, paint dryers, defense, aerospace, land-based turbines. These businesses are mature, they're growing. We have pent-up demand coming from aerospace due to the pandemic. These people, they care about cobalt. They've been trying to substitute it for decades. They've substituted every pound of cobalt they can out of it, and they need it.
Yeah, I know that. We've been speaking with battery manufacturers as well, and they're struggling to secure cobalt for the next 5-10 years. There's a battleground out there. Now, I do understand the cobalt market. I'm invested in it. So yeah, and I appreciate what you're saying. Where was I going to go? I was going to talk about back to SMP, if I may. I had a conversation yesterday with someone from Macquarie Bank, and on the topic of nickel. So Klaus is probably going to come back at you on this one. He sort of showed me the list on the supply side of all the companies who are talking the language of being able to produce nickel into the market. And I've forgotten what the bottom line number was, but in 5 years' time, it wasn't anywhere near the number being claimed today. He said about half of those companies will get into production because of the CapEx component. Western banks and institutions are terrified of these big ticket numbers. And I think Wade, you kind of maybe alluded to that too. So on the supply side, what's your take on the nickel market? We know what the demand numbers is, and we know there's going to be a big delta, but do you think it's going to be an even bigger delta if these companies currently claiming to be able to get into production don't? And then what happens?
Yeah, it's a good point. And I think that's somewhat to what Bryce was saying earlier, is that, there's not a lot of Western banks that are looking to invest in these very large projects because just the risks are too high, and no one's really building HPALs anywhere else. But it'll be driven by the demand. I think ultimately, to get the units out, some of these larger projects will have to get off the ground just to meet the demand. And a lot of it will be covered by what's happening in Indonesia. But as we move forward and the demand just grows by magnitudes as is currently expected, you're going to have to see pricing incentive to drive those projects forward, as far as I'm concerned. Otherwise, they'll just never happen.
Well, I think by dint of basic economics, that pricing will be there.
Matthew, just to add something to that, the difficulty of investment and the supply chain dynamics that have occurred in Indonesia will probably lead to lack of investment in refinery space for nickel. So that you're probably going to have, in terms of where is there constriction in a supply chain, that's where it will probably really manifest itself.
Good news for you guys.
Great news.
I think that was the point. Yeah, that's a good point.
I mean, if you look at, there's no real ambiguity as I see it about battery chemistry. I mean, if you look across outside of China, and we've got, I mean, the majority of the European and US automakers under NDA, and it's high nickel. I mean, there can be some debate around which NMC chemistry or how NCA and whether it's in and how low they'll go in terms of how high nickel they'll go, but it's really high nickel. And if you've got nickel, you need cobalt. I mean, nickel provides the density and the performance, so it gets you the characteristics, if you like, that make Tesla such a success. But it's also the cobalt provides the stability in the battery, and safety is obviously critical. So, as Greg said, like anyone, I mean, Greg and Wade, everyone who's substituted cobalt has already done it. The DRC has been a complicated place since the Belgians left. It's not like it just changed 10 years ago. And it's been substituted for complications around geopolitical instability. And now it's ESG. I mean, nobody wants to end up in a panoramic documentary. Right? And the reality is today, when Wade talked about the auditing of supply chains processes, but I can assure you there's not many buyers from Western automakers that want to be going to the DRC every 2 months for the next 5 years whilst they're kind of going through and auditing their supply chains. It's complicated. And I think that what we're looking to create with gaining a footprint into the US through Sao Miguel Paulista gives us an entry into Europe as well. Probably a quarter of the production historically found its way into Europe, the remainder Japan. But I think that there's a real business case to set up and work with customers. And obviously Greg, Wade and Klaus they've got the relationships. I mean, they've got that background. They can come in and enter and really make a difference.
Okay, and so where does your growth come from? You've got organic growth, which you're in control of now, but in this current market that you're looking at, Greg, maybe, did chime in if you want to hear, things just got expensive, right? If you're looking for targets. So how do you show the market growth? Because you got to deliver on the ground, which is what Klaus and Wade have got to do, but you too have also got to talk to the market about growth, and organic is maybe not going to be enough, is it?
So, Matt, when you say it's expensive, if you look at the forward price curve from any leading institution, there's considerable appreciation yet to come in this market, or at least expected appreciation. So I think there are still considerable opportunities out there for growth. As I said, both organic and inorganic.
Meaning
it's also, can we find an angle? Like where can we find an asymmetric situation where we can come in, see an opportunity that others can't, come in, do things a different way. I mean, that's what guided in the early period when I was with Jervois. We thought we had an angle in Africa. Turns out the angle got close, but it, for a number of reasons, didn't convert. And I think that there are opportunities out there, but clearly we're not going to go and blow our brains out. Like, we're not trying to build an empire. None of us have to do this. And to be fair, I mean, we're not in Jervois for philanthropic reasons either. I mean, we're all major shareholders. We're all heavily exposed to a rising share price. I mean, if we go from a $400 million company to a $4 billion company in 5 years and the share price is 40 cents, none of us are particularly happy. So it's not about just growing the company for the sake of growth. And I do think that, as Greg said, there are opportunities out there. I mean, we have to be clever, think about how we will move quickly. But I mean, again, you made an observation on trading. I mean, there's no speculation. So if you look at how a trader runs a book, The only pricing exposure that goes in there is the pricing exposure which is purposely kind of left in. Typically, I mean, we're locking in contracts, we're locking in, and we're managing that exposure through Sao Miguel Paulista. Sure, we've got the embedded exposure through the free carry through because we pay less than what we pay less for the metal than what we sell it for ultimately. So there's embedded metal exposure within the refinery, but it's not like you're speculating on the raw material cost. That's not our business. It's certainly not. And to be fair, I mean, it's something that's typically misunderstood. It's not the fundamental foundation of Glencore's business either, or other traders' business. I mean, it's really around facilitating product flows and managing risk. And that's, I think, where we've got the capability to set up a low-risk business around an industrial asset, which is a little different. I mean, not many groups could do this, yeah? I mean, not many groups our size could go into refining. We don't have the operating team on, but we could set up a similar call, and I could have Michael Rodriguez and Roger Ario Canoni and Valdecir Bottesini, the refinery team. Obviously, Peter Johnson's run a number of large businesses involving refineries. San Miguel Paulista will be our fourth. So I guess we kind of know our lanes, which I think organisationally works. And I think that we've got the capability, we've got the depth to do something really interesting in the space. And it is, I mean, the math doesn't add up. Yeah, you look at those numbers. I mean, obviously you take some of the numbers coming out of certain car makers in the States with a grain of salt, but they're mind-boggling, the numbers. I mean, the last time I went to South Korea, you kind of add customers that I was barely selling a ton of nickel to alongside Glencore, and you go back in, I mean, and they're almost triple-digit kind of figures, and the numbers are just phenomenal coming out of South Korea. Nickel's in for a really exciting future, I think, but it's very, very predicated on that Chinese-Indian Indo supply, because to be clear, the Indonesian supply is heavily controlled by China.
Yeah, I know. Well, yeah, it is. And do you think Philippines has got a say in the matter?
I think Philippines, I mean, it's got great geology. I think it's a challenging jurisdiction. Equally, as Klaus said, there's a couple of fantastic success stories. Coral Bay, Taganito, and probably the two best HPALs in terms of execution that there are. But again, Philippines it's not like investing in Idaho. I can tell you that in terms of geopolitical risk. It's just not.
No, of course not. Well, look, guys, I'm just so conscious of the time here. I got a lot out of that. I think that the timing's fantastic for both of these commodities. I love the big thinking that you guys apply from day one. Come back and let us know, how you get on with some of those deliverables and your expansion plans, growth plans too. I'll be delighted to speak to you again. Thank you.